Welcome today to our USDA Planting Intentions Report review and kind of a special review. As some of you who participate in these webinars know, we routinely have a session like this following a key USDA WASDE or planting intentions or pre-harvest reports. Today, we're going to extend that a little bit, and we've also brought on a couple of other folks to talk about just the markets and things going on in relationship to the COVID-19 coronavirus issue, since that's playing such a big part in the sessions today. I'll remind everyone that we have a Q&A session after everyone is done presenting, and you can submit your questions using the Q&A text panel that you should see on your computer in front of you. I'll be monitoring those as they come in, so please do send those in as you get them. As you think of them, you can send them, and I'll collect them for later on. We're also recording this session today for playback in future times. We'll let everybody know about the recording so they can go back and listen to it too if you want to hear it again. Today with us, we have Todd Hultman, DTN's lead analyst, and Todd will kick us off, talk a little bit about the Planting Intentions report that we just posted on the DTN platforms. We'll follow that with our new livestock analyst, ShayLe Stewart, who's going to talk a little bit about what's going on in the livestock markets, particularly out there in the cash markets with things going on related to the COVID-19 issue. And then we also invited senior meteorologist Bryce in to give us a little bit of a weather update. All of these things, planting intentions, the calf crop, all of those issues are going to be affected by what we're predicting for spring and summer weather, and Bryce will give us a little short update on that. So without further ado, again, welcome everybody. Todd, tell us what we just learned about planting intentions.
Well, thank you, Greg. Thank you, everybody. It's nice to be here and nice that we can still have a format to communicate to each other in a safe way. I trust everybody's doing well. As the Planting Intentions report typically goes throughout the year, it's not one of the more serious reports as I see it from USDA that we get every year, but it does give us an inclination perhaps of what people are thinking. This year, obviously, we have a lot more outside market concerns happening, and so I didn't even know if this report would show up with price impact, but there was a surprise. So let's get to the planting prospects as USDA sees it from their March survey now. Here we go. I'll just start with a chart of the planted acre trends that we've had over the past several decades, and USDA's corn estimate for this year of planting intentions anyway, 97 million acres signified by the green line on the chart. That's much higher than trade estimates we're inspecting. It's outside the average range of guesses, and it's within 300,000 acres of the all-time record high planting in 2012. So a very bearish number, and to have this coupled with the ethanol concern that we have going on in the market right now, very tough to take for this. Soybean planting intentions were less than expected at 83.5 million acres. The trade was actually looking for about 84.7, or USDA said in their February report, 85 million acres. The wheat planting intentions, 44.7 million acres. That's a new record low, falling below last year's 45.2. Cotton was a bit of a surprise, staying even with last year at 13.7 million acres. With cotton prices so depressed, I was concerned that that planting intention would drop and perhaps add to our corn and soybean totals. Before I move on from this general estimate of what USDA has given us, I want to remind us again that these are planting intentions. The survey was taken in the first 2 weeks of March. The ill-fated OPEC decision to increase oil production happened on March 7th, and corn prices didn't really react until about a week later with a new low. So needless to say, there could be some changes between what we see here in this survey and what actually gets planted, and that's another reason we have Bryce Anderson along today to help us understand just what spring weather is going to look like, because weather is definitely going to play a big part here. The final note I want to make is that when we add up the corn, soybean, and wheat total, we get 225.2 million acres for the big three crop total here. That's just down 700,000 acres from what we saw 2 years ago. So in other words, I would say USDA is pretty optimistic about the amount of acres that will be able to come back into production this year. Weather is going to have the final say on that. So USDA may be right, may be wrong. I would be a bit skeptical that we're going to have this high of a three-crop total. I do want to show some other things here. This is a chart of the top 8 states. How did the planting intentions break out among the top corn-producing states? Well, basically, we see modest increases in all 8, except for Kansas is a slight decrease in their planting intention. And the big number, of course, coming in South Dakota, 1.6 million acre, basically a rebound from a very tough year in 2019. How about soybean planting changes? Here we see sizable increases across the top producers, but not so much consistently, as we see a small increase for Iowa, no increase for Indiana. That blank is not a mistake. It's actually, they have the same soybean planting estimate that they got planted in acres a year ago. The biggest increase, 700,000 acres coming in Missouri. And again, that's one of the states that's at risk in our spring flood outlook, which Bryce will be talking about later. So still a lot of what ifs in this scenario that we're getting today from USDA. Winter wheat categories, just to mention here, winter wheat estimated at 30.8 million acres. That's down slightly, 1% from a year ago. Other spring wheat, 12.6 million acres, also down 1% from a year ago. Durum acres, the trade thought durum acres would be higher this year, but actually down 4% at 1.3 million. So that's how the wheat acres broke out here. Cotton plantings, as I mentioned, stayed the same basically with a year ago, 13.7 million acres in this intention survey. Okay, the other part of today's report was the March 1st grain stocks. And this is the part of the report as an analyst that I most look forward to from USDA, because it's, I think, one of the clearest and most straightforward reports USDA offers us, when they're basically just giving us inventories, but it's also the best read on demand that we have, and plays a key part in how numbers get adjusted in the WSDA report later. So what did USDA see for March 1? Corn stocks, they actually came in lower than expected, 7.95 billion bushels. Corn stocks were expected to come in around 8.2 billion, so this is significantly lower, and definitely lower than the 8.6 billion bushels we saw a year ago. The little asterisk I've added here is USDA's note that the 7.95 billion bushel total still includes corn in the fields. They haven't done the new production survey yet for the northern states. So in effect, without making a comment on the amount of corn there, I think they're just reminding us that this total in actuality could be less than the 7.95, because quite frankly, not all of the corn measured that's still in the fields probably will get to a decent harvest. So there's still a little risk of corn loss there. This is a topic we talked at farm shows quite a bit about through the winter, and I think the best explanation of the lower result here is that we had a lot of low quality, low test weight corn, and that type of corn gets run through and used up a little more quickly as far as feed demand or ethanol use or what have you. So once again, 7.95 billion bushels, less than expected. What did that mean for corn demand in the first half of the 2019-20 season? Well, we're actually slightly above 8 billion bushels for the first half of the year. That's the third highest on record. And I would say, given the fact that we knew that exports were in a hole this year, corn demand did pretty good holding up. And, of course, that's before ethanol had problems in this time frame. and we've got good feed demand usage going on. So a fairly decent year, decent first half of the year, I should say, for our U.S. corn demand. How about soybean stocks? Soybean stocks actually came in a little higher than expected today, 2.25 billion bushels. The market was looking for 2.24, so we could really call this a neutral report for the soybeans. And it's down almost 500 million bushels from a year ago. Of course, we had much higher ending stocks a year ago before last year's lower soybean crop. How did soybean demand look for this current season in the first half? 2.23 billion bushels of soybean demand. As you can see, comparing to previous years here, we're still being limited by the trade dispute with China, and that showed up in the first half of this season. A little higher than a year ago, but not much, certainly down from the totals of the previous 4 or 5 years. March 1 wheat stocks came in slightly less than expected, but again, it was close enough that we could call it a neutral impact. 1.41 billion bushels of wheat stocks was less than the trade guess of 1.44 billion bushels, and is down a little over 100, almost 200 million bushels from a year ago. So we are getting some of that wheat used up, as in this case, the first 3 quarters of the wheat season, 2019 to 2020. This chart shows 3 quarters of wheat use. The red line being this year's number, the demand total 1.69 billion bushels for wheat. Now that's better than we've seen the past 2 years at this time of year. But as we look at back the past decade, we really see a very sideways trend of wheat demand. This is a market that's just not going anywhere, and we're still right in that the sideways trend there. Second highest in 6 years, I guess we could call that a slight positive, but again, wheat demand staying pretty steady generally. In conclusion, for today's report, before I pass things on here, we've got corn we would have to call bearish, and of course the high planting intentions are what weighted that in today's report. For soybeans and wheat, both neutral. Lower planting intentions are somewhat bullish for soybeans, but we still have this coronavirus problem giving us headwinds for prices. For wheat, it was basically a neutral report. We do have record low U.S. wheat acres, but we're still keeping our production in line with demand very overall. Now, before I hand things to ShayLe, I just have one more set of comments I'd like to make about the coronavirus situation in general. As we look at the situation as things stand right now, obviously it still has a very bearish impact on our ag products in general. As I see it, it's basically scaring buyers out of the market and keeping investors nervous. So that certainly doesn't help things. We also have a lot of concerns about economic growth and GDP just going to nothing or going negative for a quarter or two here. So as I see the main points, we're still in a situation where fatalities are rising rapidly. The rate of increased peak is been expected by several sources just over this weekend. There seems to be a little bit more consensus that they're expecting a peak of this infection rate in the next 2 to 4 weeks. We'll have to see, of course, how that plays out. But just the fact that more sources are saying that perhaps gives a little bit of light at the end of the tunnel here. Obviously, we're concerned about the lack of economic and social interaction in the economy in terms of energy demand. We're concerned about sharply lower gasoline demand, and that whole situation being exaggerated by Saudi Arabia's decision to increase oil production. And of course, that has direct ramifications on ethanol production that we're very concerned about for our corn markets. On the other hand, world population continues to grow. People keep eating. That's a basic underlying trend that continues on through this time, and coronavirus has not changed that underlying reality. There are transportation difficulties in other countries. We're hearing about slower movement of goods in Argentina. That's helped our soybean meal price of late and could be a possible bonus for soybean demand this year. if they continue to have problems moving goods in that country. So that's been kind of an unexpected help in this situation. And lastly, it appears overall that the sense of market panic appears to be easing, and it's going to go quite in line with how the coronavirus statistics progress in the next several weeks. But it looks like the markets are finally calming down, at least from their shakiest time. Now, to help us take a look at how things have been affecting the livestock market, I'm going to hand it over to ShayLe Stewart here. And do you enter? Yes. And hopefully it's passed to ShayLe. ShayLe, are you there with us?
Hey, I am here.
Go ahead, ShayLe.
Yep, is everything well here? Okay, perfect. Well, good morning, guys. ShayLe Stewart here to give you a recap on our livestock markets. And although we didn't have a report like Todd did today, it is just so important that we stay up to date and attuned with what's going on in the dynamic world and the market and industry as they're changing through these unprecedented times. So I'm going to spend our time walking through the current situation of the three main sectors of the cattle market, starting off with the futures market, leading into the cash cattle trade, and then wrapping up today with the feeder cattle market. So let's go ahead and dive on in and get to business. That way you guys can get the information that you're looking for. So like the rest of the commodities, and I guess I should change my slide so you could see. There you go. Like the rest of the commodities, the live cattle contracts could best be described as utter chaos, engulfed with uncertainty, and dancing with the unknown. If you look at the market today, you're going to notice there's an immediate problem with the spot April contract. As of mid-morning, the April live cattle contract was around $98.60, and last week's weighted negotiated cash cattle trade traded for around $1.20 live throughout most of the feeding region. So if you do that quick math in your head, you're going to see that that equates to right around a $22 basis. And as you know, the live cattle contract expires in roughly 30 days. So the two markets have a $22 basis to sure up in that time frame. Now, if you're a cash cattle enthusiast, you'd like to see the board settle that difference, but we all know how unlikely that is. So, and now if we look a little bit in the long term and through a broader scope, it's concerning that in the time when the market is usually setting the year's high, which you can see from the chart through the prices graph, then instead of resting. We all know that come June, readily available fat cattle supplies start to increase, and that the dog days of summers are right around the corner, and that in that time prices typically weaken. So as we're seeing prices, as we are right now, the industry unfortunately doesn't have a lot of margin to work with to keep fat cattle above $1 this summer. So as we continue to look at prices and see them regress instead of marking those highs like we typically, it's concerning from that point of view. So now let's go ahead and shift gears a little bit and focus more so on the cash cattle market. We already hit on the concerning pieces of the market as we head into the summer, and although the market is in chaos and we're in unprecedented times, there has been some light shed in this season. So I'm going to take you to the next graph, and you're going to first and foremost see beef demand, and you've probably seen numbers of reports, and you've heard the buzz and you've heard the hype that box beef prices have skyrocketed, and really we've set new records, and there's been huge advancements made, and actually box beef set an all-time record for the biggest advancement made in one day. So on March 16th, box beef prices made the greatest jumps that both choice and select cuts have ever seen in one day. Choice prices jumped $16.22 on March 16th, and select cuts jumped $14.07. So with that being said, consumers are seeking beef. And I know a lot of folks are concerned with the worry that box beef prices are going to dwindle because they feel like folks are hoarding beef and that, you know what, it's just going into extra freezers or whatnot. But you know what, our life that we know has changed in that essence. A lot of households no longer have the extra storage. They just have the freezers that are on top of their refrigerator. They don't have a lot of storage. So I guess what I'm trying to say is that a lot of the beef that is being purchased right now is also being consumed. So I don't see that being a market implication that we really need to worry about moving forward. So switching to the next graph, the next point that I want to share as a little bit of light moving forward, packers have every incentive to keep processing and to keep slaughter as aggressive as possible right now. According to USDA's weekly meat production under federal inspection, as of Friday, in regards to millions of pounds processed, year to date in 2020, we have processed right at 4.8% more beef at this time than we had last year. So I know that it's frustrating for a lot of cow producers here to see packer margins grow this exponentially. But you know what? There's also light in that, in the fact that if packers are making money, they're going to keep buying cattle, they're going to keep harvesting cattle, and they're going to keep pushing and surging. So as we move into summer and as we start to worry about the supply chain of readily available fat cattle, hopefully that will lessen the effect of the price regression that we could see come summer, because packers are pulling cattle so that they can stay on top of the demand, they can stay on top of the market, and they can get the that they're seeking. Next, let's go ahead and start to talk a little bit about the feeder cattle market. So for feeder cattle, my goodness, I know that it's a really hard time because folks are just busy. They're having calves. They have to stay up with their day-to-day duties. And though it's a beautiful thing that agriculture is considered essential business, it also comes with a heavy burden. And so not only are folks trying to keep up with their day-to-day life, but they're also having to look at how to strategically plan their upcoming marketings for the year. And so I spoke with a mentor a couple of weeks ago, and he said, "ShayLe, do you remember the packing plant fire that happened this last summer?" I said, "Of course I do. Who could forget it?" He said, "You know, there's one big takeaway that I had from that time." And he said, him as a feeder buyer, he buys calves every summer. He said, "You know what, I just had to step out of the marketplace because it wasn't a position that I saw a lot of clarity or I saw a lot of certainty, so I just needed to step out." And he said, in that time frame, you would not believe the number of people I had calling me saying, "You know what, I need a bid, give me a call, what are my calves worth, what can you do?" And he said, "You know what, guys, just buy yourself some time. Buy yourself some time. Give the market a minute to go ahead and catch its breath for some certainty to come back into the marketplace and for prices to sure back up." And in that time, they said, it doesn't matter. We just need to know what they're worth. And he said the worst thing that cattlemen can do in these times of worry, in these times of uncertainty, in these times of chaos, is start to look at their assets like liabilities. So I just really hope that as we move forward and as we kind of roll through these unprecedented times and just start to look at how to manage our assets versus our liabilities, that folks really remember that their assets, when given the right time and when given the right market parameters, they still can be assets that just might take longer than what most folks had originally thought. So I'm going to wrap up today with just a little bit of countryside chatter in regards to the feeder calf side of things. Sale barns have been hit by this chaos just as much as anybody else has. I mean, my goodness, I chatted with one gentleman and he said, you know, 2 weeks ago I had a run of 7,500 cows, and just this last week I had a run of 750 head. He said, you know what, it's our job to try to prevent damage into the marketplace and really act as a damage control sector. So we're running sales as normal, and we're trying to just let the virus run its course without really letting it affect our side as much as possible. So obviously they're still hosting sales. They've done a tremendous job there, but they're just encouraging anybody that's not buying to stay away, and that, you know, just to keep up with typical health protocol. As far as we get further into the spring, grass calves are starting to become more of an interest and developing more prices there. And from a buying perspective, feeders are really interested at looking at these early summer sales, and are wanting to get some good calves bought because the time is near. And despite what the coronavirus is or isn't, the market will move on. And you know what, whether you're talking about bull sales or you're talking about feeder cattle sales or what have you, cows still need bred, cows still need sold, grass still needs ate. So from a livestock side, that's pretty much my perspective and wrap up. So thank you guys. And with that, I'm going to go ahead and pass the ball to Bryce.
That we have going on for this particular time frame. Trying to go ahead and get things all lined up here for discussion about how the weather conditions are developing. And I'm not going to take a whole lot of time for the forecast discussion because we are right in the middle of the busy day session. But I do want to point out some highlights that we have to think about for this upcoming planting season, especially because Over the last, say, month or so, if you look at the chart on the left-hand side of this graphic, you will see that there has been a whole lot of precipitation, a lot of it as rain, over the southern and the eastern Corn Belt, and even into parts of the western and the northern Corn Belt as well, with Missouri, Illinois, Indiana, Ohio, into the Delta, the entire Delta region, and then across quite a bit of Iowa, into Minnesota. There's been above average precipitation, not just by a little, but by a leap, like at least 50% above normal or above average on precipitation to start out this calendar year, 2020. And that just adds to very wet soils that we came out of 2019 with, and that's the chart on the right-hand side of this graphic. Soil moisture profiles as a percentile of average are in many areas of the northern plains, northern Midwest, southern Midwest, and in the Delta. You're looking at soil moisture that is in the 99th percentile relative to a long-term average. And so the profile is full, and we're at a point where even normal precipitation is going to be too much for a lot of this ground. It's just going to lead to the whole sponge just kind of wringing itself out. And in the last month or so, there was just a little band of the kind of the beltline of the Midwest from Nebraska, southeast Nebraska, across the southern half of Iowa, through northern Illinois, and then into Indiana and Ohio, where there was a little bit of an easing of that real wet situation. But over the last couple weeks, we've seen some rainstorms that have kind of recharged things. And looking ahead, this is what we've got to put up with or deal with for this year. And we are in a situation where there's not going to be a whole lot of real drying ahead of us as we go through this season. This is how the crop season prospects are shaping up from our standpoint. I've worked this graphic together to illustrate what I see as the big threats or the big challenges in getting everything taken care of. And I think this does call into question some of those real big acreage numbers for corn that Todd discussed at the beginning of our program here today. Over the next couple months here this growing season, snow and rain are likely to still cause some real wet soil issues. In the northern part of South Dakota, this would be north of Sioux Falls, probably, from Interstate 90 north, from Sioux Falls north all the way through North Dakota, and then the northern 2/3 of Minnesota or 3/4 of Minnesota, the northern half of Wisconsin, and then into Michigan. We are seeing an example of that in the forecast for this week, where there's a snow and rain system that is kind of wrapping up out in the northern Rockies. It's going to hold together, moving across the northern tier of states, and bring snow and rain into North Dakota, where we know that there still is a lot of corn that has not been harvested yet, for example. So that's going to be a combination of features leading to fieldwork delays and questions on acreage. And then over the eastern Midwest, from the eastern Great Lakes through the Ohio Valley, then south into the Delta and the Mid-South, this has been an area of the continental U.S. where rain systems have had a pretty consistent track during this past several months. And it looks like that is just going to redevelop during the next 2 weeks and then continuing through April. So there's not going to be a whole lot of real widespread or long-lasting periods of drier conditions. There is a section of the Midwest, and I think actually this is more from the Mississippi Valley west rather than central Illinois west like I've depicted here. that does have a reduced flood threat for this year. In Iowa, northern Missouri, eastern Nebraska, Kansas, into western Illinois. That doesn't take away the flood chance in the immediate river valleys of the Missouri, the Mississippi, the Illinois basin, and so forth. But as far as the real widespread, just wet ground flooding, I don't think we're going to be seeing that. But there still is going to be a limited period when field work is going to be available. And I think that we're going to have some acreage questions, as I mentioned. I think also that producers are going to really have to push the envelope on planting speeds, field work speeds, equipment, inventory, having to maybe buy a separate planter for corn and soybeans for this coming season. Also, there's going to be more decision making done in regard to soil conditions, and I think that we are likely to see ground being worked when it's wetter than producers would like, instead of waiting for a real ideal or tolerable situation on soil moisture. I think we're likely to see more wet ground being worked because of the memory of what we went through last year with over 19 million acres of prevented planting. And is prevented planting going to be a feature this year? I think it still will be, and particularly in the northern third of the major crop areas. So those are the main things on the weather scene that I think we're going to be coming to grips with. I will say right now that summer does not look like it's going to be a real stressful scenario, but the big issues that we have are through the spring, kind of like we had a year ago. That's my discussion regarding the weather situation. I'm going to turn things back over to Greg at this time.
Okay, thank you, Bryce, and thanks all three of you for that. Bryce, I just follow up with a question for you since you were just talking about the summer. You show that area of reduced flooding, Missouri, Kansas, a bit of Iowa, and into the Texas and Oklahoma panhandles. Any signs, I know this is on a lot of people's minds, any signs that those could turn into actually from reduced flood to even drought? Do we see any areas of some really concern about dry weather this year at this point?
Well, there's a real dry area of the southwestern plains in southwestern Kansas and then on into southeast Colorado. And the Oklahoma, Texas panhandle areas are quite dry at this time. And then farther south in South Texas, south of San Antonio, there is severe to extreme drought going on. So over the interior of the country, we're going to see a whole lot of improvement in those areas. And then from the Rockies west, we are getting into the higher time of year anyway, and a lot of that part of the country is at least abnormally dry. So I don't think we're going to get a whole lot of change in that pattern, especially in California, because California's got that real well-defined wet and dry season. We've seen some moisture work into the Northwest, and I think that that's certainly going to be useful for that part of the country.
Great, thank you. A couple questions for you, Todd, have coming in. One is just in terms of what Bryce has said about the weather, and you referred to how many acres of corn are still yet unharvested in the Dakotas. Do you have a feel for how much of that or how many bushels of that might never get harvested?
That's a good question. I think it seems to me the last time we did a crop progress report in December, there was still about 600,000 acres in North Dakota, and I know that's been getting chipped away at over the winter, and even right now they're starting to work at that again. I wouldn't be surprised if, maybe 1 to 200 million bushels would be just kind of a rough guess of what could be given up there. So it just continues to make that corn supply. Just a little bit ago, that ending stocks number 1.89 billion bushels, which I tried to keep reminding people was lightweight corn. Now with today's corn stocks figure coming in lower than expected, that production total for 2019 just keeps getting chipped out away at all the time, and it seems like we'll probably net overall be coming in about 200 million bushel lower than what it's been showing.
Okay. A related question on that unharvested corn, does that count, a questioner asked, does that count as on-farm stocks on the March 1 report?
That's a good question. I don't know the technical answer. I would guess it would technically be still on-farm stocks. So that would be my best guess, but that is a guess right now.
Okay. Follow-up for Bryce. What about growing degree days this summer and this year? Are we expecting a slower crop season just for lack of growing degree days, or should we be progressing normally?
I think that through this summer, after we get through the spring and get through some of these issues that we've got, with the wetter ground and the precipitation patterns, this coming summer is looking a little more on a normal track on temperatures, and so I think that we're going to be able to have a reasonable approach to average on growing degree day totals. And I know that last year that caused a lot of concern on the part of growers because of delayed start to the season and everything. But of course, we came on at the end, and the fall frost held off to the point that there were quite a few areas that were able to at least get close to average when it actually came down to the total length of time for crop development. But I think that we are going to see a little bit more of a normal or closer to normal type of temperature pattern this summer.
Great. A question for ShayLe. We've been reporting on DTN, and we've also been hearing that a lot of you talked about the livestock auction barns and how they were handling the situation, and we've heard that a number of them are going to right now an online auction so that they can continue to move animals but yet stick to social distancing. Do you sense that there could be a shift in how we do business in this world? If we have to do things online for 2, 3, 4, maybe even more weeks in the auction system, might we see fewer people coming to the auction barn and more moving to online, or do you think we'll shift back?
That's a good question, and I think that anytime it becomes most evident that an online platform is essential, but you can't take away the fact that, in order to evaluate and see stock, it is sometimes critical to see there in person. So it's important to have always both marketplaces open and available to the public. In times when we have circumstances as what we are, it's great and it's fortunate that we can fall back on that online platform. But no, I don't ever see the market completely online because, like I said before, folks are able to come and be in the field and need to be. So no, I don't see it completely going online, though I do see it being a side-by-side factor moving forward, not just an option.
So it's certainly helping the idea of online auctions. More people might be favorable to that, but still not to the detriment that we're going to shut livestock barns down. Great. Kind of a follow-up.
Completely.
Are you hearing any pricing issues around that folks are not having the demand or not having the bidders for their animals online, and has it hurt prices in the cash market at this moment?
Quite the opposite. So I've seen where the prices are being negatively affected by the number of cattle marketed. So obviously, I made reference to when I chatted on my meeting what, we had a sale barn. Last week we sold 7,500 calves. This last week we sold 750. The problem comes into the number marketed because it's really hard to attract buyers when you have a smaller size sale, because you know what, you can't get the load lots that you need to develop a unified purchase or a unified load. So it's really important to have those numbers to where buyers can come in and get the different types and kinds of cattle that they need. So actually, it's not the online platform that's affecting it. It's the lack of marketing of the lack of calf being able to be marketed. And actually, from a seed stock point of view, from like bull sales, the sales that have had the online option have actually done phenomenally well through this time and really have not been affected during the coronavirus implications and during the times in which it makes it harder for folks to go and travel. It's actually helped their sales, not hindered their sales.
Interesting. That's an interesting side note there. That it's easier to jump on a bull sale online versus making the trip to go see the animals live. Great. I guess I'd another question for Bryce in terms of sort of our expectations for the year. You talked about the issue of a lot of potentially we'll see prevented planted again this year. I wanted to kind of fine tune on that. That's mainly in the river valleys and in the areas where we really had problems last year. So you're seeing those same areas having the same issue?
Yeah, I think that's where the potential could be. And I'm pretty much breaking it at Interstate 90 from Sioux Falls east toward Rochester, Minnesota. I think that from there north is where the greatest potential for this issue is going to be. And it could be a real kind of pocket of that type of problem. It could focus in the Red River Valley in Minnesota and North Dakota. That wouldn't surprise me a bit. But even then, some of the old lake bed areas in northeastern South Dakota, west central Minnesota, where ponding is maybe a little bit more prone to develop, I think that's where we could see it the most. And then that would go into Wisconsin too, because we know that there was quite a bit of Wisconsin that had real wet ground problems a year ago. I would not also rule out Michigan in that standpoint. And I think that's where the greatest potential is for that type of declaration. And it also would not surprise me that maybe growers are a little bit quicker to declare prevented planting this year than they were last year. Now that goes into marketing and even policy type of details, but that would not be a big surprise to me either.
Good. Todd, maybe a last question for you, unless others bring some in. And please, we've got a few moments left. If you've got a question, throw it into the Q&A slot there. But Todd, a person asks, and you and I have been in this business for a while, Bryce too, all of us that have been around a while. The question is, anything that you can think of in the past that we can point to that would say how quickly could we recover from this coronavirus situation? I mean, how quickly would markets pick back up again? Because we've heard, of course, dire predictions of recession and long term, and then we've also heard people talk about the upside down V, and just as soon as we get the all clear, markets should take off again. So I guess what's your thoughts on that? And is there anything that you can point back to that would say, here's why I think this will do this way?
Yeah, I think that's a really interesting question. And as I'm thinking about that, obviously the coronavirus situation is unlike anything we've seen before in specific terms. But I can tell you in terms of market sentiment, I mean, I cut my teeth as a broker in the mid-'80s when we were just getting into the huge piles of corn, which people were afraid would be around for a decade or more. And of course, that disappeared quickly with the help of some weather. We had a drought that quickly erased that. In the year 2000, it took a little bit longer for our demand to recover from those depressed markets. But I remember 1998 for crude oil. It was a very bearish situation, lots of crude overproduced. It looked like OPEC was really trying to drive things down, much as Saudi Arabia is trying to do it now. And I remember reading at the time that, it's going to take 5 years to recover from this surplus that they're building. There's just no hope for crude oil prices. And in less than a year, we had a pretty significant rally coming out of that. I think it got down to almost $10. So I often think of how quickly our perspectives can change, especially when we get to these extreme market points where, especially for corn right now, everything looks dark no matter how you look at it. And I just never cease to be amazed by the surprises and the turns that can sometimes come from nowhere when it comes to markets. And of course, weather is often a source of that, but there's been other events too. So I can never just count things out the way that some people write things off. There's one other point I have to add, Greg, as I was getting a little time here to catch up more on the corn stocks numbers. I think it's an interesting point that not only are total corn stocks in this March 1 report down over 600 million bushels from a year ago, but the percentage held on farms is also lower. So we're at 56% held on farms of the total versus 60% a year ago. The reason I raise that issue is because through much of this winter, when we were having this debate about how much corn is out there and why doesn't USDA reflect it in their production numbers, people who favored the USDA argument said that, the basis is the basis is strong in the country because farmers are holding back so much corn. They're just hanging on longer and they're stubborn about letting it go. This report shows that that's not the truth. There's no evidence for that. So once again, I think it points back to what farmers have been saying all along, and that is there's less production than USDA's been pointing at. Unfortunately, it took this long to show more evidence for that, but at least here it is.
Well, less production, and then as you said earlier, lower test weight, which means we chew through it faster too. So,
yes, all the above, right.
Great. Well, I'm not seeing any other questions at this time. I would just throw it open to either ShayLe, Bryce, or you, Todd, too, if there's any final comments that you have.
Well, things change every week. I would just say stay tuned to our comments and closing market videos, and we'll just try to keep things updated as well as we can. But thanks for letting us talk to you today.
Great. If no other comments, then I echo Todd's statement. Thanks for joining us today. Thanks to Todd, ShayLe, and Bryce for being here. Hopefully this came through okay. We had a couple of audio issues there early on. Obviously, everybody's working remotely, and we're trying to get these things done under these sort of interesting circumstances with social distancing. But appreciate everybody's participation. Stay safe, be healthy, and hope everybody has as good a spring as they can.